Good morning, everybody. This is Chapman Walsh with Chap Analysis, and it is Thursday, January 11th, 9:47 a.m. And today we had inflation data come out here in the U.S. Of course, yesterday we had the Bitcoin ETF approvals. So the market is piping hot this morning with all type of activity. I have it on a 4-hour S&P chart here just to keep in mind the overall view. So this is on this particular time frame. We're just recapping here. Ultimately, we see this as a flat corrective pattern that's essentially been in process since December 2021. That we see is actually finishing in really sometime in 25, if we're lucky. So, but in the meantime, we're gonna print higher here. We're gonna typically wave B is gonna be between 100% times the length of wave A and 1.382% times the length of wave A. So right now we're coming on the equality level, which would be 48.18, and that's the view from a 4-hour chart. So when we go on a shorter time frame, we charted this out yesterday, and I'll show the minute charts. We expected a wave 1 up from that corrective pattern that started back on December 19th. That actually was a beautiful irregular flat that met Fibonacci projections classically and shape characteristic, which is beautiful. And then we went up here as expected in an impulse move up, which I'll show here in a shorter time frame. So this is a 4-hour. I'm going to go down to a 1-hour chart here and enlarging it. So this wave B is complex, so it's really a WXY, and the Y that we're in process now is at least a double 3. So the second double of that wave Y is what we're in process in now, which essentially is we're in a wave Y of Y. And that Y wave of Y appears to be a zigzag. At least that's what it appears to be right now. And we finished the first 5 waves up here, and then we did an ABC irregular flat correction, and now we're headed up in 5 waves we project. But the first of those 5 waves is happening right now, right? So that's how we look at this, and I kind of have it written down here. This last week's the interior wave projection met itself, and it was beautiful. So now going to the 30-minute chart to get a closer look at what's really going on here. 30-minute chart. Okay. So this is on a 30-minute. We printed higher. RSI is confirming that we should see higher highs, even though right now there's a little bit of contracting. Okay, so we have the Elliott wave count labeled here for the intraday. So we count this as we counted this as a wave 1. It was a flat, but the flat was this happens in strong pushes forward. The flat was a truncated wave C, so that's how the wave 2 terminus is able to be higher than the start of wave 1. So long story short, that was wave 3. Wave 4 was a triangle, A, B, C, D, and wave E was an overshoot. And then wave 5, so wave 5 really could be terminating right here. This could be the terminus of wave 5, right? I think that the market should find some support here today and be able to print another wave 5. I think this is the interior 4th wave It could be. The market will really tell if we breach below 47.71, then we're actually going to be correcting. Then this 5 waves up has already completed, and now we correct that 5-wave pattern into somewhere between 47.50 and 47.34, right? Which could very well be the case. Today is Thursday. Market is configuring the inflation data. Tomorrow's earnings, all counts are that the earnings are expected to be good. I could see us retracing, going into today, retracing a bit into somewhere between the 50% to 61.8% Fibonacci retracement levels, and then blasting up here. We thought that we would go a little bit higher and then correct, but I mean, this was a level that we were cognizant of since yesterday. This particular area, so that's fine. This looks classically acceptable either way, even if this was somehow an interior part of this wave 5. Maybe this was a wave 4 of the interior 5 waves of this small degree wave 5. Either way, we would simply have like a little triangle pattern and then print higher or somewhere a little bit above the 4800 level. We would trace down, and then still the scenario that we see a pop tomorrow morning with earnings coming out. So today is going to be kind of I would think it's going to be kind of a mixed day. The overall market is going to be awaiting earnings and figuring out what the inflation data really means. Yesterday we had a mock options trade when the market was at 47.68. It was a January 17th expiring 48.20 call. It's priced at $8 a contract yesterday. So just in a mock idea that we got 8,000. Now yesterday, we made a video yesterday morning around 9:30. What time was that? What was that? Around 9:30 yesterday. And that was Tuesday. Yeah, around 9:30 yesterday, and the market really blasted up in beautiful fashion, just as forecasted. So yeah, I mean, right now I think our bias is going to be more that this interior wave 5 has terminated, and now we are going to get ready to correct that in a wave 2 correction. This should be healthy, and then we'll prepare for a true blast up tomorrow. But we were looking at S&P call yesterday. When the market was at 47.68, I mean, yesterday we would have closed that position out when the market reached these levels. Yesterday, I think it reached 47.91 yesterday. Yeah, we would have just went ahead and closed that out at that point in time for almost 100% profit. But yet and still, and if we did, we would be looking at right now whether we want to try to open up another short-term position, but it's something that I would favor against. Looking at the 1-minute chart, this looks like it looks still kind of undecided. I'll wait for some other confirmations in the next 30 minutes to an hour. That looks like this still could just be this wave 4. Excuse me. It still could be an interior wave 4. As we look at this, yeah, I think it's kind of hit or miss here. Now, if we breach below 47.74, that that kind of gives us confirmation. If we hold that level, then I would be a little bit cautious about what direction the market is going to go intraday. But ultimately, we're looking to completely terminate in this area, in this high 47s to low 4800s level, so we can retrace that and then blast up to where we're going. And where we're going is 5100 to 5300. Ultimately, that's where we see the direction of our path here. So this looks like this was really going to be deserving of a noonday video about the S&P, just because the short term print is a little indecisive here. The market is there's a couple different potential short term patterns that could unfold here and still kind of end up at the same place. So I'll do a noonday video. Again, right now we would be cautiously bearish below 47.86, and I'd be surprised if we breach above that before 12 o'clock. But I'll see you guys at noon. Okay? All right. Signing off.